Hey guys, Mike here. So I'm sorry for the blurriness on the right there. We're getting some rain, and I guess maybe we'll get another tropical storm or hurricane coming in. We'll have to see. I know we got an emergency issue by our governor, so we'll see how that plays out. But, more importantly, want to look at what's going on in the market and stuff, because obviously we got election day tomorrow. How is that going to affect the markets? November 10th coming up here, Thursday. Going to have CPI, so we're going to look at that as well. And then go into what to be expecting tomorrow and looking out for. And I find it funny because if you ever want to follow like where the money's really going, just look at what stocks are making 52-week highs. And we see here we got an oil company, a fast food company, an oil company, and a pharmaceutical company making 52-week highs. And I sent some out to the members today showing like Oxy, BP, I think it was Chevron as well, and looking at the chart and you're like, can this continue to go? Because one of them just did a breakout today, and the other two are heading right up to the top of the channel they've been trading in for months now. And Oxy, of course, has earnings tomorrow, and so it's going to be interesting to see. I think at this point in time, people thought, oh, yeah, oil's come back down, it's over. And the funny thing was, oil actually went down today. Those stocks kept going up, right? And so, and going into what we're looking at here when there's an election, you can see right here, this is called the midterm boom, right? And it's in the last quarter of the second year of the presidency going into the first and second quarter, right? And you can see the S&P performs pretty dang well. And here's what we got going on tomorrow. I don't care what party you're with. This ain't a political channel, believe it or not. But let's be real. We got a Democratic president, so we got a few options here, right? And this is how it performs under partisan control, and actually performs way better under partisan control than it does if just one party controls everything. And so obviously the forecast is, everywhere I look at, either Republicans are going to take the Senate or the House or both, right? So let's just pick this one. That's Republican Congress, Democratic president, 13%. If we get a split from the House or the Senate, it's even better. And one theory behind this is because it causes gridlock. Like companies like nothing better publicly traded companies in Wall Street, if the government just stays out of their business. As long as they're giving out free money, that's fine. But if you have gridlock, no kind of regulations can get passed, right? And we know the parties don't cooperate. They do nothing together. So it will be complete gridlock for a good 2 years until the next presidential race. So we kind of know that, right? And then if we look in a little more detail here, this is really interesting numbers to me. But it's how the S&P performs following the midterm elections. And I want to focus and just scroll down because all I care about is 2000 on. And why? Because I'm big on the market. That's when you get internet, you get algorithms, you get all kinds of leverage we're using we didn't use back in other days. But check this out. Look at 2002 going forward, right? And you might look at these numbers. A lot of people will look at these numbers and go, man, some of them look really great. But isn't it more important to kind of compare apples to apples? So what are we in right now? We're in a stock market crash, right? A downtrend. Well, look at 2002, right? Didn't look good, negative. Look at 2018. We were in a crash from October to December, negative, right? 2006, we were not in a crash. 2010, we were coming out of one. 2014, we were still moving in the bull market. And so that's really the big question. Wouldn't the numbers skew towards basically what we're in now, which is a downtrend in the market, right? Because those other ones, you can see plain as day. Because if you go back to on that and freeze it, 74, negative numbers. We were crashing, right? And there was one other on there where we were crashing as well, negative numbers after the midterms. And so that's what I'm very curious to see. I mean, I think obviously you don't understand where it's going to go to probably bump up or whatever. But as far as just looking at the month, 3 month, 6 months out, right? In the years it was crashing, it was negative because the markets were going down. They were still in a downward trend, right? And so that's one thing to look at. I mean, to me, what's going to be interesting, what do you guys think about if the Republicans take the Senate and the House? What stocks do you think you can see going up? Because there's a list of them out there. Do you see oil stocks going up even more? You see that happening because then the president can't follow through and get anything passed to try to tax oil companies' profits even more? Does that happen, right? And I mean, don't forget, they get late in November. They still have November, December to try to get legislation through. But I mean, that's going to be really tough in the Senate with a filibuster. So, just let me know in the comments, and let me know in the comments how you think it's going to turn out tomorrow. Like, who's going to hold what, right? And the other thing to look at is CPI. Like, this is a big one. And right now, look, the numbers are forecast to be pretty dang high. But the kicker is, and this is an article off Seeking Alpha right here, and you can see CPI is estimated to have risen by 7.9%, down from September's reading of 8.2. Meanwhile, core CPI is estimated to have increased by 6.5%, down from September 6.6. So they're saying it's going to come in lower, right? The problem, as this gentleman points out right here, is that core CPI and CPI in general has beaten the estimates 10 out of the last 12 months. And then if we scroll down, you can see right here, the Cleveland Fed is forecasting a much higher inflation. They're forecasting 8.1 and estimate of 6.6 for core. The problem with their stuff is they have been wrong. Was it 14 of the 16 times they've come in under what it actually came in? So it came in hotter than expected. And real quick here, guys, don't forget to take advantage of the $99 deal they're putting out there. Normally $239 for the year, now only $99, which is cheap as can be. And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. And so when you look at those numbers, that's not a very good batting average, right? And if you look at the numbers on the face, I'm glad, I hope they come down from September, but again, that's a snail's pace. That's not fast enough. At this pace, it's going to take how long? Hit me in the comments. How long do you think before we even hit, I'll say 3%, forget 2. I think 2 is a pipe dream for the next 2 years at least. So what do you think? How long before you hit 3%? Give me a number in months, that is. And if you want to go years, go years. But still, if you're telling me the Cleveland Fed has been wrong 14 out of the 16 times, and then the other estimates were wrong, like what, 10 out of 11 or whatever it was, and the CPI always comes in hotter. And if you look, it's going to be interesting because remember, oil was up almost 10% in October. Lumber was up in October, and there was one other, and I'm trying to think of what it was. I just read it. It was up like 9% as well, but it's a key component here. The good thing is, supposedly rents are going to come in a little less or something month over month, but the year over year, obviously still extremely high. And so, that's going to be, I don't know, just let me know if you think, we're going to come in higher, the Cleveland Fed gets it right this time, or shockingly, we come in lower. And I think we all know, obviously, if we come in higher, hot, the market most likely will read it and say, oh my God, that means the Fed's going to have to just keep on tightening, and December's, you'll probably see a 75 basis point hike pop up in the probabilities at some point in time if that happens. All right. But then if it comes in at expectations are lower, we know how the market is. It goes, oh, this means the Fed can back off. It went down 0.2% or whatever it is, But again, if you just take a step back and look at the overall numbers, you go, man, that's high. Even for core, even if it comes in their projection, you're still over 3 times what the Fed wants it to be. And you see how slow it's coming down. And so, that's the 2 big things driving the market this week for sure. Either way, you can see today, it was kind of like blah. I sat there, doing some trading until like 10, 30, 11. I finally walked away. It was just boring at that time. And then, of course, we got the usual like afternoon rally type deal. And, oh, look at us, here we come. But again, and I'm going to come out with a video tomorrow kind of showing you guys what I've been talking about, where there's just this, where algorithms kick in, and I'm going to prove it to you. It's plain as day when I show you these charts. You're going to say, yep, I guess that's what these algorithms are programmed for, because you see it. And no matter what's going on with certain companies, I don't care if they're dog crap. Once they sell off X percentage, they base out. The big money rolls in, stabilizes them, and starts pushing them up, right? And I think what they're doing is kind of, what I'm talking about tomorrow is they're trading. They're doing what Cathie Woods is doing. The hedge funds, forget long-term investment right now. They're just trading the hell out of this market is what they're doing. They're running it up, running it down, all kinds of stuff, and making a ton of money doing it. And so you can see it in the charts. It's plain as day what's been happening. And that's what they're doing, starting probably since like June. And so they'll probably continue to do that. We'll have to see. But, the stuff to look out for tomorrow, as you can see right here, obviously, are we traveling? Norwegian Cruise Line has been just on fire lately. Remember, it was dead in the water, and all of a sudden, oh, look at that. It got pushed back up. Walt Disney, traveling. Norwegian's going to be traveling, of course. Oxy, which I'll talk about in a minute. Upstart, Plug are popular ones. Affirm. Don't forget this one, Builders First Source. That kind of has something to do with the housing market, so we'll see on that one right there. But, just going to Oxy, I expect them to be, just because, oil stocks are just killing it. Energy companies are killing it. But look at this right here. This is what we're about to reach, right, on the S&P 500 energy sector. It's about to reach where it was in 2013, which is higher than 07. As you can see, that's a big level right there. And of course, when we usually hit these levels, we usually don't blow right through them, which is why I sent the members those stock charts saying normally you hit and then you end up getting rejected and then maybe retest, that kind of stuff. But with earnings coming up for Oxy tomorrow and some other oil companies, the momentum could be big, right? And if yields and the dollar and all that stuff sell off, it just creates this momentum for stocks in general, and then everything gets pushed up. And so I don't know, I'm just curious to see. I would think they would get rejected because people, are taking profits. That's usually why they get rejected. They hit those levels. People say, "I'm out. I'm taking profit," right? And because people in those stocks have made a lot of money. That's why you keep seeing those stocks go up and down. Oxy, as soon as it gets in the 50s, pile in. Buffett piles in. Everybody piles in. It goes right back in the 70s, right? Ain't that what's been happening? And so, in the same way with some of these other oil companies. And so, but if oil keeps going up, if lumber keeps going up, if these commodities start making a charge back, and that's usually what happens with inflation. It usually, I've showed you before, it doesn't just come straight down, especially as slow as ours is coming down. There's usually a comeback and just like a stock, up and down, up and down. And so it looks good one month, and then next month you go, well, there it goes, right? And so let me know in the comments what you think. I'm personally think, I don't know, way they calculate these numbers. I think it's coming in higher than expected is what I think it's going to be. And I don't mean like way over. I mean, if they're forecasting 8.1, I'll say 8.2, 8.3, somewhere in there. Core 6.5, 6.6, somewhere in there maybe 6.7. But, nothing like astronomical where they go, oh my God, it's 9 again. It's 9. Did you see it? I don't think anything like that. But again, like I always say, nothing surprises me in this market, and it wouldn't upset me either way. So, anyway, let me know what you're doing. Hit the like, subscribe button, guys. Really appreciate it. And I'll see you guys tomorrow.